Hello everyone. So today we are going to discuss another penny stocks named Global Textile India Limited, which is pricing at rupees 3.65 per share. If we look at the brief interview information about the company, so the company is engaged in textile business, manufacturing of textile products, and company is having various product portfolio from denim to shirting and printed to home textiles like mattress and all those linens which are used in home essentials. If we look at the brands which the company is brands the company is having is like Ford, Indigirls, Indigen, X, and Origin. So the company is having a good manufacturing capacity of 20 lakhs bed sheet and uh, 36 million meters of fabric and 2.5 million bottoms per annum. So if we look at the revenue, so majority of the revenue comes from sale of goods, and the geographical split, if we look at, then the export comprises of nearly 24% of the revenue. On the other hand, domestic sales account for 76%. So the company is having a right share issue, and the company has a 1:1 share split. A right share issue company has announced in January 24 February 2024. If we look at for raising the funds of 35 crore rupees, that is inclusive of premium amount as well. If we look at the market cap, so the company is having a market cap of 110 crore rupees. So the company is a purely a nano cap company. If we look at the PE, so PE is around 21, which is less than the industry PE of 28. So the PE, if the PE is less, it's directly shows that the if any share which is priced at 3.65, so there is some undervalue factor by the company is priced so low as we compare it with its peers. There definitely there's some problem in the stock, or there is something which if people are skeptical about, that is the reason why the stock is not performing that accordingly. If you look at the ROCE factor, so ROCE is in double digit, which is a good signal. If you look at ROE, which is around 8.58%. Now, if you look at the lifetime, if you look at the lifetime pricing performance of the stock, so the stock reached its highs at December around 14 rupees, and now it is ailing at rupees 3.65 per share. So the pricing is not decent in last. If we look at last, I would say 1 year performance. So in last 1 year performance, the price is a stagnant position, and it is around 3 to 4 rupees. If we look at various other factors, now the company has, if we look at the pros, so the company is having debtor days which has been improved from 125 to 900 days. Promoter has increased holding by 1.20%, which is not material. If we look at the companies consistently reporting profit, this is system generated pro and con, so they should not have much relevance. If we look at the quarterly results, so this is a seasonal business. So in December quarter, the sales are being uh, always hit, and that is the reason why we will not see the quarter on quarter basis sales, but the yearly quarter on quarter comparison, like in December 22 the sales is around 74.81%, and December 23 it is around 92.83. So the sales from previous quarter to the current quarter has been increased, uh, which is a good sign. But the most important thing in particularly in textile business, so the textile business is very much hit by the profit margins or operating profit margins, and it is being denied by it is being I would say there is an this sector, textile sector, is being always being hit by the investors, or I would say the government. No one is giving an importance to this sector in last few 1 or 2 decades. So that is the reason why they have very less margin in terms of operating. If we look at the past, however, if we look at the current government scenario, so current government has given a push to increase the textile importance, and that is being seen from last 3 or 4 quarters, that in March 23 the operating margin is 2.67%, then 3.89, then 4.81, now it is 6.40. So the profit operating margin in this sector is improving, and that it would give a good signal to the investors to invest in these stocks in particularly in textile sector. Now we look at the TTM rate, or annual turnover rate. So the in March 23 it stood around 400 crores. Now it is the revenue run rate is around 438 crores. But the Profitability will seem to be better if we look at the March when the March 24 data is being published, result is published. So obviously the EPS will be seen more than the 5 crore rupees. It is currently it is trailing 12 months data, so it is giving us a overview of January to March 23 quarter as well. So that is the reason why the profitability is shown less in comparison to what the operating profit margin would be. However, if we look at the compounded sales growth, so the compounded sales growth is good. If we look at, they are always in double digit. If you look at what's the sales growth or the profit growth or the stock for performance, so that would be a good signal. On the other hand, if we look at the equity capital, so the equity capital is around, the company has raised in March 21 bonus issue, because of which 2 is to 1 bonus issue has been done. That is the reason why the equity capital has been increased from 10 crore to 30 crores, and the profitability, the reserves has been reduced by 20 crore rupees, and that is the reason why from 33 crores the reserve has been dipped down to 20 crores. But in actual terms, the reserve is not being decreased, but it is being moved towards the equity capital. And if we look at the other factors like borrowings, so the borrowings are like a company having long-term borrowings around 20 to 21 crore rupees, but the company is consistently short raising their short-term borrowings. Now the this is the major issue which we have to address here. Let us deal with that accordingly. Now if we look at the cash flow, so this is the skeptical point where you should be alert in this company stocks like this, and that is the reason why the pricing is not decent. First, if we look at the uh, operating cash from operating activity, so in the majority of times the company is having cash from operating activity negative, which shows that the cash flow, company is unable to manage its cash flow, or company is maintaining its cash from the financing activity only. The company, the business, the core business is not generating the cash uh, to either pay off their interest as well. See, if we look at the interest payments, so company is having an interest payment of 11.75 and the repayment of borrowings of 4.81, for which they are not paying their interest from operations or profitability, but they are paying their debt or interest by raising another debt. So it shows that the company is in debt trap position. The company is financing its debt from taking debt again, or the company is issuing proceeds from shares. But there is a catch that the company is going to do, and we'll look at in the next quarter. So the company has is going to issue a equity capital of 1 is to 1 right shares, which is totaling amount of 35 crores. So we have to check that whether after raising that 35 crores, will the numbers are going to change, or the numbers will remain the same like this. If the numbers will remain the same like this, then that is not a good indicator, and the investor should be alert or skeptical with this situation. Because if a company is paying its interest by taking another loan, so the company is not generating the profit, and the profits are not in a cash profit. The company is not having a cash profit. So this business is not feasible. If we look at, now we will talk about the other factors like the and the promoters has consistently reducing. If we look at the promoters, so the promoters has consistently reducing their stake in the company from 73% to lowest position at 40%. Now in the previous quarter they has increased their holdings from 40% to 42%. So that would also be another concern, why the promoters, who are the majority shareholders in the company, has reduced so much stake in the company in the last 3 years from 73% to 40%. Nearly half of their investment in the company is being divested. What is the reason why they have done this? So these all are the things which we have to consider, and then we would make the decision to invest in the company or not. And that is the reason why the pricing of this stock is a barely minimum priced of 3.65 rupees per share. However, this is an informative video solely to increase in financial literacy to retail investors, and I think that this is not a financial advice. Neither I am giving any portfolio management services. So ask to your financial advisor before investing into stock markets. I hope you all enjoy this video, find the video informative. Thanks for watching.